So tax season is technically over. The deadline has passed. And, I want to say I'm proud because I actually got my taxes done on time this year. Last year, I had to wait for some documents that took forever, and I ended up having to get an extension. And this year, I only had one document that I had to wait for, and I managed to get it like 2 weeks ago, and I was able to get it in there and still make the deadlines. Hello, welcome to another video. I am Violeta, the first-gen real estate investor and host of the MoneyChisme podcast. And if you're new here, I, talk about real estate investing, personal finance, entrepreneurship, and basically, other money talks. So if that interests you, make sure to like and subscribe. Now, even though the tax season is over, now is the perfect time to start planning and creating a strategy for next year. And I did, talk about, tax planning and strategy with a guest that I had on the MoneyChisme podcast, and her name is Sugay, and I will link that episode down below. But I want to focus mainly on the benefits, the tax benefits of real estate investing that, some of these I was able to use from my rental properties that helped bring my tax liability down from my, all the expenses that I had last year. And even though last year was a rough year for my rental properties, I had things that came up, some lessons learned. So when people think of investing in real estate, they kind of focus on like two, maybe three main goals, and that is, of course, making money in either the form of cash flow or flipping a property. But they also think about the appreciation. Now, how much is this property going to be worth in the future? But a lot of the things that are not included and talked about as much or considered when people get into real estate investing, especially me, I definitely didn't think about the tax benefits when I got into real estate investing. So the first tax benefit with real estate investing is the ability to depreciate your property. The IRS sees this as an asset that is going to lose value because of the wear and tear of the home from using it as a rental property. Now, the way that depreciation works is, again, you're able to depreciate your house of, because of the wear and tear over a span of 27.5 years. Now, the thing is, it does not include the land. It includes the property itself. And so let's say you had a property that after you remove the land value, it comes out to, let's say, 100K. You're going to essentially be able to depreciate about 3,600 and some change dollars each year. So off the bat, you're already having a deduction of $3,600 to reduce your tax liability. Now, there is another depreciation that you can take when you put a rental property in service. It is called bonus depreciation. Now, bonus depreciation is different from the regular depreciation, which, depreciates the value of the property itself over the span of the 27.5 years. Bonus depreciation allows you to depreciate the cost of if you had to put new HVAC, you need to put a new roof or stuff like that. Those costs, you can depreciate it and take that up front. And so that's an incentive to continue buying new properties because it continues to bring your tax liability each time And, each year it was, established in 2022, was made available. But it went down each year. So like in 2022, you could depreciate, you get the bonus depreciation at 100%. And then it just went, down by 20% each year. So in 2024, you can depreciate 60% of your upfront cost, of qualifying costs, right? And then 2026, it drops to 20%. So by 2027, it's gone. It's apparently in the works of hoping that it gets renewed. So until then, this year in 2020 to 2026, you want to really, buy some rental properties to take advantage of this tax benefit. So the next benefit that real estate provides is that you are able to take deductions off of some of the costs of having this rental property. So this includes your, mortgage interest deduction. So that interest that you're paying on this rental property will be used to as a deduction, as a cost, because it's a cost. And same with property management, the repairs and maintenance, upkeep of the property. All of that is deductible and is used to lower your tax liability. Now, another deduction that you can take is the property taxes. Now, I know with rental properties, you're like, well, the taxes are high or whatever. And that does take, you want to take that into account with your cash flow, but you are able to deduct this with your taxes. Another benefit with real estate is the ability to defer your taxes. And, this is done through something called 1031 exchange. So when you sell a property, you're having to pay capital gains tax. So the profit that you make of your property, you pay taxes on it. You pay capital gains taxes on it. The thing is, with a 1031 exchange, you can defer these taxes by reinvesting that profit into another property. So for example, right now that I have these two properties, I can eventually, once I, decide maybe I want to do a different strategy or just scale up, I could sell one of these and, do a 1031 exchange where I use the profits and buy a different type of property. And because I did that, I don't have to pay the taxes right then. And you can do this indefinitely. Like you can just continue to put off paying the taxes on the profits of these properties as long as you just keep doing 1031 exchanges. And this is a pretty good benefit because you can grow your portfolio and build wealth pretty much tax-free this way because you just keep on pushing the taxes to future you, right? And the last benefit is the passive activity losses, which I kind of already briefly talked about. And that is just, being able to, deduct your passive losses. And with this, I was able to offset my rental income that I did bring in last year. And this is a great benefit because I am still bringing in money. And had I not been able to, deduct these things and have this loss, then I would have had to, on top of the loss, pay taxes on this rental income. And so it would have just been like a double whammy where not only did I, have a negative cash flow, now I have to pay taxes on the income that I did bring in. And so with the IRS, it lets you balance that out. And it's a great way because I'm still, upkeeping, I'm still bringing in income. And although it didn't go straight into my pocket, it went into the house. And that's still money that for me because even though, I had to, spend the money to replace like the water heater, fix the HVAC stuff. That's part of the house. That's going into the house for my asset. and it's increasing the value and at least making sure that it doesn't lose value because I'm maintaining the home, but I don't have to pay taxes on it. There's even other added benefits if you do real estate investing, kind of like full time, which I don't want to get into it because it gets a little bit like complicated. So for example, when my husband gets out in October of the military, he could just, technically be the real estate manager. And because of that, now I'm able to deduct some of that off my W-2 income. And it's like, it gets really into the weeds, which I want to avoid because I'm not a tax expert, which is why I go to my tax expert to help me with these things. And but these are the things that you want to start considering and planning for, which brings me to my last point, is that, again, just to kind of drive it home, is to make sure that you also consider your taxes, your tax benefits, and create a tax strategy plan for these things when you are doing these transactions, when you're planning for buying a rental property. And I myself already have scheduled my appointment to do my tax strategy and my tax planning for this year, for the rest of the year, and for in the future, because there's lots of things that I have going on, not only with real estate investing, but with MoneyChisme. I'm gonna have some stuff out that is gonna be bringing in income. So now I have small business, entrepreneurship, all that stuff. So that's one of the things that, if you want to get into real estate investing, definitely plan for these things and learn about these things and start working on these things now. So if you know that this year you want to buy a rental property, or you want to flip a home or something like that, talk to a tax person to help you understand what the tax portion of it is going to be. It gets really complicated, so make sure you're not trying to do this yourself, because I definitely messed up the first year I had my rental property that I made one of my houses, my first home, my rental property. I didn't know about depreciation, and I didn't find out until I went to buy another property. And the lender was the one that told me, that was like, hey, you didn't depreciate your property. And that's because I had done it myself. So I didn't know these things. And so now, lesson learned, now I have somebody, an expert, do it for me, and an expert to guide me to make sure that I am strategically doing all these things to help reduce my taxable income and my taxable liability. So that way I keep more of my money that I can invest again. Well, that's it for this video. I will see you in the next one. Bye.